Morning. This is an interesting market. This is a very interesting market. Yesterday was rough. So when I left you on the morning stream, things got bad. Things got really bad. And it wasn't as bad as it was in the morning when we were talking, but it got worse as soon as the morning ended. By the time I came home, things just got really, really bad. Now things are getting worse. Jobless claims increased to 280,000 as of last month, which that data just came out today. Stocks fell even more. S&P 500 fell about 4%, which is one of the worst numbers it fell in a day ever. It's one of the top 5 days in history that it fell. It's rough. And we got a lot to talk about. It got worse as soon as the morning. Good morning, all. Good morning, all. Getting to the point where I'm just tossing darts when picking stuff to buy. Everything is selling off so hard. How are you doing, Mr. Kraja? I'm actually doing good. It's not too crazy, but like this market is tough, man. Not gonna lie. So let's get into the numbers here. Palantir actually held up really well, to be honest. Like it's at 786 pre-market. I know it's below 8, but yesterday the carnage Tesla's almost below 700. Look at this. Tesla's at 704 pre-market. It's likely it's going to go down below 700. And Palantir stayed at 8 for most of the pre-market. I know it's at 786 or after hours yesterday, but it held up well. So you would assume Palantir should be at like 630 right now, which is probably coming. But, it did hold up. It's just a question of if it can survive everything else that goes on. Look at the QQQ, down to 289. Google, the one, when I made the first video morning stream, this was the one I wanted to buy. It's down to 2238, down another about 4.5%. Apple is said to be filling up a gap on its technical charts at 125. Look at Apple, it's at 140. It's $1 away from hitting the 130s. Like, this is called blood and carnage. This is not even trying to fearmonger. This is just like prices we have not seen before. These are not prices that are worse than COVID, but it's getting there, right? So Apple, last time it was at 140, it was October 2021. So let's say 120 was April 2021. So if we get down to April 2021, that would be getting rid of a year's worth of gains, and that would be coming down back to that level. Bitcoin, for some reason, is holding up at 29,000. I don't know how this is holding up. Like, given what's going on with the S&P, and if we see the NASDAQ fall even more in the S&P, I personally don't think Bitcoin holds up. But yeah, this is, and I guess maybe CNBC as well. They're putting out that this is a rough crash. This is a rough crash. Morning Mitt, are we red or green today? I definitely think we're red. Personally, that's just how I think it's going to happen. It held because I sold cover calls at 750. Yeah, today's a bit rough. Let's take a little drink, to get through this. As always, iced tea, not tequila, because I don't drink. But if you do drink, I wouldn't blame you. Netflix, a report came out that it's losing long-term subscribers. Let me pull that up real quick. Netflix long-term subscribers. Yeah, so The Verge reported survey shows Netflix is losing more long-term subscribers. Users subscribed to Netflix for more than 3 years represented 13% of total cancellations. 13% of total cancellations are people who have subscribed for more than 3 years. Now, you ask why are they subscribing? It's not really because you could say the content and stuff of Netflix is bad, but it's rather people are cutting costs, right? People can't afford to pay for this type of stuff. Like that's a little bit too much. The information says it got its data from Antenna, an analytics firm that gathers data from 5 million Americans who share their streaming subscriptions anonymously. The data show that overall cancellations hit 3.6 million people last quarter, an increase from the 2.5 million in the past 5 quarters. Well, that's not good for Netflix. Look, CNBC is going to have a ton of red. There we go. Look at this. S&P down to 380. Dow's down 260 points. NASDAQ futures down 71 points. Coal. Guys, this is the funny thing. The coal marketing. What's coal stock? They're down 5%. The coal marketing chief officer left yesterday before earnings came out. Good morning. I get paid to wait. Apple hit 118 in 2021, and I had it for a second. We all just sell too early. I'm down 32% on the month. Don't feel bad. I'm probably down the same amount on the month. The Kohl's person, the marketing officer, left yesterday night before the earnings came out, because that's how bad it was going to be apparently. So Kohl's expects fiscal 2022 adjusted earnings per share of $6.45 to $6.85, compared with prior forecasts of $7 to $7.50. Revenue, they did $3.7 billion. That's not horrible. Kohl's first fiscal quarter reported a net income of $14 million or 11 cents. So they made $14 million in profit. Now the reason Kohl's sales fell 5%. So let's go to Kohl's stock. The reason I like Kohl's is because of their partnership with Amazon. If you guys have ever been to a Kohl's, you can return any Amazon item at Kohl's. It's literally what has kept Kohl's alive, because that gives so much traffic to the store, because people have to return so many Amazon items, and then when they come into Kohl's, they end up buying stuff. So Kohl's is down 5% pre-market. Let's look at their chart. Kohl's at its height was $83 in 2018. At the lowest of the pandemic, what do we get to on Kohl's? Wow, we got to $10. March, $10. And now it got back up to 64, and now it's down to 42. So another retailer, obviously, that's getting hit, and that's rough as well. Jake says, because Netflix sucks, their shows are so bad, they have like 2 good shows released a year. I also think it's people cutting costs, like you mentioned. Yeah, I mean, half their content feels like a political stance now. Yeah, I mean, I also feel like Netflix, obviously, I've been on this train for a while. I've been saying this since November, that they don't have content. They don't have an algorithm. They're not meaningful to me as a platform. But I think the cost cutting is also big as well. And that's what's going on. Man, oh man, oh man. We're going to talk about the new Palantir product after market open. It's their new Gotham product in Europe. That's the referencing to the title of this video. I'll do a video on that later today. I'll write an article on dailypalantir.com about it as well. So we'll talk about that. But yeah, it's rough, man. This is let's go to the jobless claims data real quick. Jobless claims. So U.S. unemployment, U.S. weekly jobless claims, continuing claims lowest since 1969. Initial claims for the state unemployment benefits increased 21,000 to a seasonally adjusted 218,000. Though claims have been largely treading water since hitting more than a 53-year low of 166,000 in March, the labor market is rapidly tightening and generating strong wage gains. I left the article. There were a record 11.5 million job openings at the end of March. Claims are down from an all-time high of 6.137 million in... Okay, so I mean, that's... it's trending not in a horrible direction. Like, that's the weird part. This is a good point Justin said on Money Talks yesterday. This might be a recession on Main Street or Wall Street more than it is on Main Street. Because if there's 11 million jobs that are open, people are willing to hire people, right? And when a recession happens, it's a lot of layoffs and cut costs. But if there's 11 million jobs open, like, there's jobs that are available. The question becomes, are there people able to work? And what it's looking like is that Wall Street's going to suck, but if it doesn't hurt Main Street as much, maybe that's the best type of recession that we could ask for. All right, let's see if I can time it. The market is now open. Wake your ass up. Let's see what we've got in this market. I am going to be looking out for a couple of unique things here. So I want to see what happens to Palantir. I want to see what happens to Target and Walmart. I want to see what happens to Apple. A lot of red, a little bit of green here and there. A lot of red. Let's start looking at them. So Neo, okay, up 2%, not too bad. Let's go to Palantir. Up 1%, not too bad. Apple down as soon as it opens. Google down. Tesla struggling. It was at 704. It's at 707. Tesla's trying to get up a little bit. Target. I mean, Target's pretty much the same as yesterday. It's already been beatered down. Walmart down 1%. Coinbase is a little bit green, 3-4% there. SoFi at 2%. That's not too bad there. Roblox at 33. I mean, it's relatively green and relatively red at the same time. It's nothing insane. I mean, and because the carnage kind of happened yesterday really badly. So, like, look at ETH. ETH is down below 2,000. T-Doc struggling to stay at kind of 30. Where's Ark? Ark Innovation. What's Ark Innovation doing? Ozark is a great show on Netflix. Yeah, I never watched it, but I know people have liked it. What are y'all's margins? I'm at 8%. Y'all are on margin, bro. Ark is at 41. Y'all are really on margin. I'm a little too scared of margin right now. I get it though if you've got some money to play with, and I mean I know people who are over like all in on this market right now. So I'm not against margin. It's just like, man, a little scary right now with margin, just because we don't know where it goes. Right? We just have no idea where this goes. I just want to know at the end of the day, will it all be green? At this red and this green and this morning doesn't do anything. Yeah, I mean, that's true. S&P 389. So 385 is a technical bear market. 3,400 is a real correction. At least that's what Morgan Stanley is calling for. Ah, man. If we hit 3,400 on the S&P. Look, I showed this yesterday on the 5-year chart. So this is what, 2000. Let's go to 2009. So 2009, this is where we had the crash, right? So we were at 126 November 2007. By March 2009, we had hit like 50, right? Yeah, like 53. That was our low. So to get back to 126, it took about 4 years, 2013. So it took us 4 years to get out of that, and then we kind of started going naturally back up, even though there were some, bad dips. Like this one was a bad dip. We were at 263, then we went down to 223. This one, COVID, 312, right down to 224, but we shot back up. Now we're at 478. 3,400 would be right around the January 2021 level. And then it's a question of how long does it take to get back. And if inflation doesn't like get better, it will take a longer time to get back to our all-time highs. Like all of this really does depend on inflation. Amit, grab some margin and buy Tesla stock. It's scary right now, man. Tesla's very volatile. At what price would Tesla look attractive to you? 600 is when I like it. But if the S&P goes to 3,400, Tesla is like probably a $500 stock at that point, maybe a little bit less than that. 3,400 is a very big drop. I mean, we're at 390. That's 500. That's 50. That's 50 points, right? That's a lot to get down there. So it's something I guess to kind of think about. Admit or buying Ark at these levels. The ticker symbol U convince you? No, ticker symbol U did not convince me at all, and I love him. But again, the thing that ticker symbol U in that interview that we did was that Ark is a part of your portfolio that should be exposed to growth, right? Because it's only disruptive, only innovative. That's why they're not hedging their bets, all that stuff. The problem is he didn't convince me primarily, and I asked him about two specific companies, which were Coinbase and Teladoc, if they're innovative, right? So like everyone's like Ark is the exposure to growth. The problem is no one's talking about if Ark is actually innovative. And the more I look into them, Robinhood is not innovative. Spotify is not innovative. Teladoc is not innovative. I mean, and ticker symbol, you kind of agreed with why Teladoc is collapsing. Coinbase to me is also not really innovative. So, I mean, at that point, it's just like, I don't know. Neither is that other one, Roku. Where's Roku, by the way? That's why I'm just like, I don't know. Now, granted, Ark will probably go up just because like the whole market will go up. So like, I don't think it's wrong to have Ark in part of your portfolio. It's just a question of, if we go to 3,400, can we get Ark at 30 versus 41? So Palantir is at 811. Okay. Target, wow, below 1. Target is actually more attractive to me than Ark, because I know Target's going to be here for the next 20 years. Like Target and Walmart are not going anywhere. if I want to have like cash-like positions. Now, if we had a recession, it could get worse, but these are stocks that are supposed to be pseudo-recession proof to some extent. One of the cool things about Walmart, this is actually proving Kathy's thesis. She actually quoted me, Kevin, here, and they had a little Twitter thread, is that inventories are building up, right? And if inventories are building up, then let me go to Kathy. Then that means that it's kind of proving her thesis that there's going to be deflationary effects. So Kevin said, Elon Musk on why we have inflation. The obvious reason for inflation is the government printed a zillion more dollars than it has. Velocity of money held constant. This is not super complicated. Kathy says, important debate. In the last 2 days, Walmart and Target reported that nominal sales increased 3 to 4% on a year-over-year basis during the quarter ended April, translating into 3 to 4% year-over-year declining unit sales adjusted for inflation. Their inventories are exploding. Walmart has about 32% more inventories. Walmart's inventories increased 33% in nominal terms year-over-year basis, translating into 20 to 25% in real unit terms. That means they have more. They have 25% more TVs than they did last year because people aren't buying 25% more TVs. As Target inventories increased by 42%. In 45 years in business, I have never seen such inventory excesses. U.S. consumer sentiment, as measured by the University of Michigan, the best measure in my experience, has plunged into levels not seen since the 08-09 global consumer crisis. Consumers are rebelling against their loss of purchasing power. And what she means there is that because inflation is going high, consumers are not buying as much. That's why their sentiment is going down, right? And they're rebelling against their loss of purchasing power because they don't want to buy stuff if it's more expensive than the value of the money that they get if wages aren't increasing as well. I believe that after flattening for the past 2 years, the velocity of money will resume the decline that started in 1997 and accelerated during the coronavirus. The dramatic decline in consumer sentiment and spending during the last few months corroborates this thinking. That makes sense as well, right? Because if the velocity of money will have to start declining and accelerating based upon consumer sentiment, well, consumer sentiment is going down, which means once it starts going up after inflation goes down, that would allow consumers to buy more. Now that the growth in M2, which is just total money supply, that's what M2 means, has declined to low single digits at an annualized rate during the last few months, that's because the Fed is taking money out of the market. If the velocity of money does decline, then we will be back to facing the risk of price deflation. Consistent with this line of thinking, credit default swaps, the price of insurance policies against credited as measured by market, are surging. The yield curve is flattening, portending disappointing growth and or lower inflation, and stock prices are plummeting. All of this stuff is coming together in one way. I trust that Fed Chair Powell and the Federal Reserve governors and presidents are evaluating more than a short-term supply chain bottlenecks that may have been caused by over-ordering and are now showing up at Walmart's and Target's record-breaking inventories. All of this is saying Jerome Powell, do not increase interest rates. Why? Because that's obviously bad for growth stocks, because valuations get compressed when interest rates rise. Now, if she can prove that actually inflation is about to go down because inventories are going up, because the yield curve is flattening, because supply chains are getting better, and consumer sentiment is going down. Why is that so important? Because consumer sentiment must go down. Demand must decrease in order for people, for supply to increase, right? Because if demand is high, then you keep buying stuff and the prices are going to go up because there's not that much supply. So that means that inflation is going to happen because prices will have to go up to supplement the demand. You're going to have to curb the demand somehow. And the only way to do that is to raise the prices. It's like if you charge $100 an hour for your time and everyone can pay that, you have to charge like $500 for an hour of your time. Now, some people are not going to pay that. Only the people that can afford it can pay it. If that happens, we don't need high interest rates because naturally deflation will happen as a result of over inventories and lack of consumer demand. Kevin said, it's an honor to be quoted by Kathy Wood. Also neat that I was reading this terminal this morning and found myself reading my own name. P.S. I agree with Kathy on inventory. She's going to end up being correct and everyone will look bad in 3 years and say, damn. Interesting. Oh, Namir. I don't know if you're still watching this, bro, but he's in the chat usually every morning. Elon Musk like my tweet. Beat ya. Love it, Namir. So this is a interesting argument. If she's correct on this, then again, I mean, the ARK should explode if interest rates don't go higher. So should growth stocks in general. But I don't think we get there until we have an actual like market crash, which has not happened yet. Not at that level. Amit, Amazon, Microsoft, Intel, Tesla. that should be the portfolio. I should make the Amit portfolio. The markets are moving up. Yeah, the markets are moving up, but how much? Like, and guys, in the morning, I don't know, it's just this thing we got going on, but the markets always move up when we're talking, but then by the time I leave you, I look back at my market and then my portfolio and it's like, I don't know if it's going up anymore. Like, again, dead cats like to bounce. There's no reason for the markets to go up. The inventory thing, though, is one of those reasons that's interesting. I just don't know if it's enough to fully declare the market to start going higher. That's where I'm at. Tesla's at 710. Avoided going below 600. Buy into the open and sell into the close. We following the usual again. I mean, yeah, seems like that would happen. Inventories are building up. Messaging, packaging, can package inventory. Thank you, supply chain. Yeah. And I think China's clearing up a little bit better as well. By June, they said they're going to start opening up a lot more parts. So, I mean, we're going to see what happens. Let's go to CNBC. See what those... By the way, guys, for those who watch Money Talks, we have no show coming out today. Because Tom is... What's Tom doing? He's on, like, some vacation or something. Average gas prices could hit $5 a gallon. Okay, we'll cue that. What else do we got here? Bitcoin. Okay, let's hear some stuff about Bitcoin. I'm curious about this one.
Seen people like with tea leaves and stuff. Okay, and then I've seen like people do cards and they look at things. And this is better than that. These are real. These are historically indicative. The things that you look at has happened again and again in the past, but there's no guarantee they happen again in the future. But they're certainly useful. So I guess I'm just selling technical analysis because there's precedent for it. Let me start with who's leading whom at this point. You've made the case that crypto as a risk asset was actually leading some of either the equity markets or NASDAQ, S&P, Dow. Do you still think that it's in that position as sort of the pace car?
I certainly think that Bitcoin and others are reflective of market sentiment. And of course, this is a very highly sentiment-driven market. And as a technical analyst, I mean, really, that's what we're trying to measure. We're trying to understand market psychology as it manifests itself in supply and demand, and therein affects these price trends, right? So when you look at Bitcoin right now, it did break down, as you know, and saw that downside follow through to support of roughly 27,000. Very natural place for it to stabilize, and indeed that's what we're seeing. And I would actually think that Bitcoin would look a bit worse than it does as of yesterday, today, or this morning. If we were going to see further downside of this nature for the equity market. So I guess that would suggest that Bitcoin is indeed giving us an indication or an earlier indication of market sentiment as we come in every morning. And right now it's suggesting that we still could see a relief rally or oversold bounce for the broader market on the equity front.
Interesting. So they think Bitcoin is stabilizing at 27,000. Let's look at this one. There could be a great market entry point to put money.
You guys were also talking about valuation a little bit, and while the market was surely rich, not relative to bonds, but rich outright prior to this correction, the equal weighted S&P is trading about 15 times earnings now. The long-term median's more like 16 and a half. That economically sensitive cyclical sectors, which have not been leading this decline. I mean, I saw headlines this morning when I turned on my Bloomberg that the stock market is really discounting a recession. It's really not.
Someone said, "Amit, are you using the terminal?" No, I'm not. That terminal is pretty bloody expensive. I turned like I'm from London. It's pretty bloody expensive. No, I use CNBC, and I use websites that I can anonymize myself to get through the subscription paywall. I don't use the terminal. Not yet.
It's the overvalued tech sectors that have led to declines. It's overvalued stocks in general that have led the sell-off. It's been a valuation compression as much as anything, and now valuation is fair. Now, who's to say it couldn't overshoot somewhat? That's where I sort of bring the history in to make a decision about whether enough is enough. But it doesn't look to me like a recession in any meaningful way. It looks like we've corrected an overvaluation because of all that liquidity, and we should be at a pretty reasonable spot. One other thing I would urge the viewers to think about is the best entry points during business cycles are clearly if you can buy at the depths of the recession, you had the wherewithal to do that. That works out great. But when we had these Fed policy related corrections, like the end of QE1 in 2010, when we had the flash crash, or the debt ceiling debate downgrade, end of QE2 in 2011, those are great entry points. So I think this is going to turn out to be a great entry point for people to put money to work for the rest of what I think will not be a 2-year business cycle, but something akin to 5 at least or so. And there's considerable upside from here.
Yeah, I mean, look, he's saying the same thing that everyone else is saying, that there is value to putting some money to work here. The question is how much. Look, Tesla's at 703. It was just at 710. So, like, we're green, but we're also a little bit red. Look, Palantir just dropped it. Look at that massive red candle. Right there. Boom. We were just at 80 something, right? We were just at 815, right down to 802. That's why it's just like, man, these are so, like, it can just go in a second, like literally a second. Look, oh, we got it. Apple's at 139. There we go. Apple hit below 140. There it is. Apple below 140. Apple below 140. I'm going to tweet that. Done. Apple below 140. There it is. And then look, this whole thing just went red. Palantir went below 8. Tesla. Boom. There it is. There's the red candle. It's starting. We're looking at it in real time. Look at this. Is this just like, did a Bloomberg report come out, just hit a bunch of analysts? What's going on? Boom. It just hit it right there. Right. We were like literally 2 seconds ago. We were all like, markets are up. It's not that. Boom. Right there. Wow. And Apple's an indicator for the market, man. Apple's a major indicator. Amit, just use credit and buy one. Guys, I don't know if it's the right time to be taking on credit card debt for Bloomberg Terminal. Man, wow, look at this. It's just falling. It's just falling. The red candles just started. There's the watch list. All that red just started. All that red just started. It's like the market decided, hey, at 9:48, we're gonna do something worse. Twitter, man, Twitter. I feel bad for Twitter. Twitter's just like, oh, we got to talk about some Elon Musk tweets. So let's while the market says Elon's being a little weird. I'm not gonna lie. Now he's always been weird, but it's weird. In the past, I voted Democrat because they were mostly the kindness party, but they have become the party of division and hate, so I can no longer support them and will now vote Republican. Now watch their dirty tricks campaign against me unfold. So he's a Republican now, and it's not about politics. It's more so just about why is he saying this? Like, what type of show is he trying to put on? Right? He's one of those CEOs who doesn't care. And, he's like, hey, I'm getting tired of the Democrats. He's talking about whacktivism. A lot of people don't want Tesla to get into politics because the brand of Tesla is so pure, and as soon as you put politics into it, it can get things rough. But I don't think he cares anymore. Also, the S&P, Exxon is rated the top 10 best country in the world for the environment, social, and governance, ESG, by S&P 500, while Tesla doesn't make the list. ESG is a scam and has been weaponized by phony social justice warriors. I do agree with it. This is kind of a scam. The fact that Tesla is doing the most for the environment is not part of ESG is ridiculous. Nonetheless, though, he's going off on a rampage. And I think partly is because he's mad that the stock price is getting hammered. And obviously, he has buyer's remorse for Twitter. I did a video on that yesterday. Look at this. Tesla 694. There it is. Tesla 694. Tesla below 700 just like that in seconds after being at 710. 694. Wow. Oh, there's a green candle. There's it coming up. Look, we're looking at it in real time. Did that dip just get bought? Did that dip just get bought? And then it's struggling right there. This is happening in real time. Apple 139. It's struggling to stay there. Amit, what is your political viewpoints? I don't talk too much politics. It's not worth talking about it. Amit, can you sell your Palantir position so we can get back to 40? If I sell and we go back to 40, that would be the I would be taking one for the team. Hey Amit, can you scroll up to see what Brian Tavares asked? Let me go back to that Twitter thingy. Here we go. Let's go to this. I didn't see Brian Tavares. I know there's a lot of Republicans under his tweets though, just like literally just yeah, I missed the thread. I'm sorry about that. But man, this is rough. Those ratings mean nothing. They gave Ford a higher innovation score than Tesla, which is an absolute joke. Yeah, and that's the thing. I think like the fact that the ratings mean nothing, but Elon's still tweeting about it shows that he's a little upset about it still, even though he knows it doesn't matter. Tesla 695, man. And again, if the S&P is just, where's the SPY? Because if we're hitting 370s, 360s, it's going to go lower. Look, it's 380. Boom. That's where I thought we should have been at sort of market open. We had like this really weird, let's go to 392 open market, and then we just go right back down. He also tweeted about Apple and their workers being lazy and entitled. Did you guys see this this Project Veritas video that came out about Twitter? Bro, we got to watch it together. So Project Veritas like does this undercover stuff where they record people. They recorded Twitter workers talking about Twitter. And we've got to see this video, bro. This Project Veritas. It was wild. This is one of them, but there's a different one. Yeah, this is the one. All right. So this is a Twitter employee telling a journalist that the company's unprofitable because of their woke ideology. So let's watch this one.
Don't make profit, so it's gonna say ideology, which is what's led us to not being profitable.
The rest of us who have been here believe in something that's good for the planet and not just to give people free speech. Because again, like, these people really do believe in what we're doing. These are the policies we've put in place for misinformation or mislabeling media or whatever.
Yeah.
Why do you think this should be taken down?
Yeah.
Like, those are the questions they're going to ask him.
Yeah.
You know,
Yeah.
It's going to be hard for him to be like, oh, because people should make their own decision. It's like, no, but people don't know how to make a rational decision if you don't put out correct things that are supposed to be out in the public. As an advertiser, as my business, is what I do every day and why I go out, is like, we want it to be as fair and transparent and accurate as possible.
Yeah.
And if that means there's a level of censorship to make.
So the guy is basically saying, look, we do have to censor some people in order to make the platform like managed in some extent. And he's basically like, Elon's not going to get that.
Make it correct, quote unquote. Again, and what does correct mean? I guess like it just kind of goes back to the idea of like, well, what is correct?
If we're implementing all these rules that and Elon wants to dismantle them, then technically our ideology has led us to not making money because we're not making money. And Elon wants to turn it the other way so that we can make money. There's a statement they need all 7,000 people to say. And so they can't like tell us that like the real truth.
He has Asperger's.
Yeah, I know that.
So he's special. You're special needs. You're literally special needs. So
That was the rough part, man. He called him special needs, and he basically was like, this guy doesn't know what he's doing because he's special needs. And it's like when you create the companies that Elon Musk has created and do the things he does, and you're just called, oh, you're special needs. That was the sad part.
I can't even take what you're saying seriously. Targeting of tapes.
Wait.
You can read it.
Let me see. And how to protect yourself. Groups like Project Veritas are active right now. Is that?
It's like some group that's trying to just out the employees. Like they're trying to go on dates with them like this and record them and then go sell it to the New York Times and say this is what the Twitter employee just said. This is what's really happening. This is what they're telling us to not do. You're lucky that you met me organically because I would be questioning everything about you.
Bro, that was the craziest part at the ending. Like, the guy's like, you're lucky I'm just like, I know you, but the guy's actually a journalist, so it's just like, it's kind of scary, low key, how that happened and how he kind of got duped by the guy, and the guy actually Was a journalist, so that was rough at the end. Markets moving back up. What is this game? What is... No, it's not. S&P's at 388. I mean, I don't know. Oh, Tesla just went back up. Wow. You're right. Goodness. What is this? What is this? Tesla right back up at 706. Wow, 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 wow. Palantir right back up at 818. And again, the reason Apple's still at 139 though, and S&P still, like, it doesn't seem natural. Again, it's I guess you could say that was the pseudo bottom, because when people saw below 700, they just scooped up more shares, which means that the buying pressure was high. The bulls won that little dip because they were like, no, we're not going to have this dip further. This is too good of an opportunity. Now, does that continue? I don't know. We'll see. The ending, right? The ending was wild. The ending was wild. That was actually, it was crazy, bro. Like, when I saw it for the first time, 2 days ago, I was like, yo, what? Absolutely wild. What else do we got here? SoFi 732. Oh my goodness. Robinhood 987. Robinhood's only above 7 because FTX bought a stake in them. You can't fool me, market. We going back down to 350 end of day. Bro, I kind of just want to get it over with. I'm like, yo, just get it. Let's go down to the bottom and then let's work our way back up. Whether it takes a couple of years to get there, that's fine. But this little seesaw game that we're playing, it's not interesting to me anymore. It's not interesting to me anymore. Yeah, I mean, look, it's going green, going back green. And again, the reason I'm not like super happy that it's going green is because I just know it's fake. Like, I literally just know that it's just not real. There's no reason why it should be green in the first place. You could say, oh, it's undervalued at 700. Sure. You could say Palantir is undervalued at 8. Sure. But the market in general is overinflated right now, even with it being that down, given the nature of supply chains and inflation. I guess we'll see in the next quarter how things ultimately turn out for it to, if inventories really do build up at that point. Was that what was that guy using to record him so discreetly? He probably had a camera in his jacket. He probably had like a lens of a camera in his jacket connected to a microphone that looked like a button, I would assume. That's how I would think of that. That's how it would be going. Bruh, not all of us are in our 20s. It's not about that. Why would we want to wait till December 2022 for the market to finally hit a bottom and then we can go back up? And for no reason. I'd rather let's get it done with now. Let's lose all the hundreds of thousands we have to lose now, paper money, and then let's start working our way back. Because if we go to 3,400, we're not like going down to 3,000 and then 2,500. Theoretically, we could, but at that point, it's like that just doesn't happen. You know, like when it goes down, it goes down. We're already down, 80% of the Nasdaq. We're already down, I think 30% Nasdaq year to date. So we're already down. If we got to go down another 20%, let's do it and let's go back up. It doesn't matter how old you are, because if you're 50 and it goes down in December versus now, there's no difference, right? Unless you're selling, maybe you want to get out of the market and you want the market to have a little rally so you can sell everything and then get out. But if that's the case, you're trying to time it, and I don't know how you're going to be able to time it. That's just hard. Amit, you overpaid for Palantir. Why didn't you buy at the IPO? I didn't know about them at the IPO, unfortunately. I didn't know. Whales are buying the dip of the dip of the dip. That is true. Amit, Palantir is a good buy at 8. Should I pull the trigger? It will lower my cost basis. Personally, I don't think it's worth buying yet either. Tesla's right back down to 701. Look at this. Look at this. It went right up to 710, had a little bit of rally, right back down to 701. Like, I can't trust anything in this market. I'm not buying anything at all. I'm literally not buying anything. Now, $8 is a fine price if you want a DCA, right? That's totally fine. I just, personally, I'm like, I don't trust any of this right now. What do you think of Wejo? Wejo's a great company. They just had their first quarter business results. I like them a lot. But you know, they're known as a SPAC, so they're going to struggle to get momentum over time. They're just going to struggle. That's just the nature of their product at the end of the day. If you bought at the DPO, you would still be down. That's the saddest part, bro. If you bought at IPO or DPO, you'd still be down. Let's see what Twitter is going over. What's on Twitter? Twitter. The U.S. government the U.S. might be next. Interesting for NEO. I don't know how many people are into NEO. NEO's an interesting one. Costco is up today. Not bad. Or a little bit of a green candle. From being down 422 up 425. Ark is holding up well today. SPY is the only index that's getting still hammered today. The rest of it, how do you say it's not worth buying at 8 when your cost base is over 20? No, it's worth buying at 8. The problem is if it's going lower, do you want to just save that capital to buy it at 5 or 4? And if I believe the S&P is going to 3,400, then 5 or 4 is not crazy to buy it at. It's just, again, I already have so much Palantir. It's not that I don't want to buy it at 8. I just don't want to buy it now because I have zero conviction about how this market is operating. And a lot of these dead cat bounces are literally just that to me. Inventories is the first piece of data I saw that got me to think, oh, we might be headed towards a different direction. That was the first positive sign I've seen. But it's not enough for me to be like, I'm going to start buying stocks now. Like, look at this. Tesla just hit below, it went to 690. Now it's at 709. What is to say it won't go back down there again? Like, that's why obviously you shouldn't be trying to time it. I get it. But it's still very volatile in a matter of seconds. And it's just scary right now to buy some of this stuff. It is accepted. Stocks only go down. Yes, that is exactly what I've accepted. What if it never goes lower? When you see a stock at a price you like, you have to pull the trigger. No, then I'll just buy it at 10. Like, it's not a big deal. Like, again, if my cost basis is 19 and I buy it at 10 versus 8, if I buy it at 8, I'm not getting my cost basis to go down to 13 today, right? I have to put in at least 15 grand to sort of create that type of price decrease in my average. So if I'm only putting in like 1,000, 2,000, it's my average is not going to go down that dramatically. So, I don't care too much about it. But if it just goes lower and lower down, then, we'll see what happens. All right, so that's it. That's what's going on. Have you looked into Rocket Lab at all? I have not looked into Rocket Lab at all. I've heard of them, though. I've heard of them in a couple of articles. Palantir is associated with them, right? To some extent? I believe so. They're up today a little bit, 1%. All right, we'll see where the market goes. I'll have some more videos coming out later today. Thank you guys for joining the live stream. I hope you all 315 of you appreciate you guys checking out the live stream. Some videos coming out later, a little bit later today. Patreon in the description. I haven't plugged the Patreon in a bit. If you guys want to join, you'll get access to the Discord. It'll be a fun time there talking about stuff. And yeah, thank you guys for joining. It's Thursday, almost near the end of the week. It's been a rough week, but still got plenty of time to get stuff done. Tried not to focus on the portfolio too much. I've got a lot of other things to do in my life. So I need to focus on that stuff versus just looking at stocks all day. Hope everyone has a great day. Hope everyone has a good closing into the end of the week. And I will see you in some videos today. And I'll see you tomorrow, 9:20 a.m. Eastern. Thank you for being here. Bye-bye.